Assalamualaikum warahmatullahi wabarakatuh. Let me introduce myself. My name is Diah Ramadhani with student number 2341 2060 from class Akuntansi 23A. In this video, I will explain the material on the environmental accounting course. Introduction. Environmental management accounting is a special type of accounting that focuses on helping companies understand and manage the costs and benefit of their environmental activities. Unlike traditional accounting, which only record financial transactions, AEMI connects financial data with environmental performance. It helps managers see how their business activities affect the environment and how improving environmental performance can also reduce costs and increase efficiency. For example, a company that reduces waste or save energy can track both the cost of implementing this program and the money saved over time. EMI allow companies to plan, control, and evaluate environmental action systematically, turning environmental responsibility into a measurable and manageable part of the business. By using EMI, companies can make decisions that are good for both the environment and the company's long-term financial goals, ensuring sustainability while remaining competitive in the market. Next to why EMI is important. EMI is important because modern businesses are expected to balance profitability and environmental responsibility. Government, investors, and customers are increasingly demanding that companies reduce pollution, save energy, and manage natural resources carefully. Environmental management accounting helps companies identify, measure, and control environmental costs such as energy use, water consumption, waste disposal, and emissions. By understanding the true cause of environmental impact, managers can make decisions that not only reduce harm to the environment but also save money. For instance, improving energy efficiency may require some initial investment, but it can significantly reduce electricity bills over time. EMI also improves transparency and corporate reputation, showing that the company is serious about sustainability. Overall, EMI is a tool that helps companies achieve business success while being environmentally responsible, turning environmental protection into a strategic advantage. Next to goals of EMI. The main goals of environmental management accounting are to help companies make better decisions, improve efficiency, and increase transparency. First, EMI help managers identify and measure all environmental costs, whether direct or indirect, and the benefit of environmental program. Second, EMI support planning and controlling environmental activities such as waste management, energy reduction, and water conservation. Third, it helps companies reduce risk, including penalties from environmental violation or costs of environmental damage. Fourth, EMI provides useful information for reporting to stakeholders, including investors, government agencies, and local communities, showing that the company is responsible and sustainability. Finally, EMI encourages companies to see environmental programs as investment, not just expense, because good environmental management often results in long-term cost saving, better efficiency, and improved corporate image. By achieving these goals, EMI allows companies to combine financial performance and environmental stewardship in a balanced and strategic way. Next, two types of environmental costs in EMI. In EMI, environmental costs are usually divided into three main types. The first type is direct costs, which are easy to measure, such as costs for buying material, equipment, or labor used in recycling, pollution control, or cleaning program. The second type is indirect costs, which are harder to measure but still important, such as monitoring pollution, training employee and environmental safety, or managing compliance with environmental regulation. The third type is hidden or contingency costs, which are expect or emergency costs, such as fines for environmental damage, restoring damaged land, or repairing ecosystem after natural disasters. By identifying all these types of costs, EMI provides a complete picture of how much a company spends on environmental management, making it easier for managers to evaluate the efficiency and effectiveness of program. Knowing these costs allow companies to plan more accurately, allocate resources wisely, and improve environmental performance while maintaining profitability. Next to EMI data of financial and physical. EMI uses two main types of information to help managers make decisions: financial data and physical data. Financial data includes costs related to material, labor, equipment, and investment in environmental programs. Physical data include measurable environmental factors, such as energy consumption, water usage, waste generation, pollution level, or emissions reduced. Combining these two types of data allows managers to see both the monetary impact and the environmental impact of each activity. For example, a factory can calculate the cost per ton of waste reduced or the cost per kilowatt hour of energy saved. This detailed information helps managers understand which programs are cost-effective and environmental benefit and worth continuing, and which program may need improvement or alternative approach. Using both financial and physical data is a key feature of EMI that connects accounting with environmental management in a practical way. Next to EMI technique, activity-based costing. One of the most common techniques in EMI is activity-based costing. ABC assigns environmental costs to specific activities like recycling, wastewater treatment, or tree planting. By doing this, managers can see exactly how much each activity costs, making it easier to evaluate its effectiveness and efficiency. For example, a company may discover that recycling paper costs less per kilogram and has a higher environmental benefit than recycling plastic, allowing management to focus research on the most cost-effective program. ABC provides detailed and accurate information, helping managers make strategic decisions about environmental programs. This method also allows companies to compare activity, optimize research, use and plan environmental initiatives in a way that maximizes both environmental and financial performance. Next to EMI technique, full costing. Another EMI method is full costing, which records all environmental costs, including hidden costs that might not appear in normal accounting. Hidden costs include soil restoration, water purification, waste cleanup, or reducing emissions from production. Full costing gives a complete picture of how much a company spends to manage its environmental impact, allowing managers to make informed long-term decisions. This method is especially useful for strategic planning because it helps managers compare alternatives, see the total cost of environmental programs, and evaluate both short-term and long-term financial and environmental benefits. By using full costing, companies can ensure that environmental investments are profitable, sustainable, and aligned with corporate goals. To EMI reporting. EMI support environmental reporting, which is essential for transparency and communication with stakeholders. Report might include financial data like costs for energy, water, and waste management, as well as physical data like emission reduced, energy saved, or water recycled. These reports allow managers to evaluate the result of environmental program, plan improvement, and make decisions based on real performance data. Reporting also helps companies comply with law and international standards and demonstrate to customers, investors, and regulators that they are serious about sustainability. Environmental reporting turns EMI into a practical tool that connects accounting, management, and communication, allowing the company to show both responsibility and efficiency. Next to example of EMI in practice. EMI can be applied in many industries to improve sustainability. For example, a manufacturing company can track costs and savings from reducing energy use and emission, showing that energy-efficient programs reduce electricity bills. A forestry company can record the cost of planting trees and maintaining forests, showing benefits such as carbon capture and timber growth. Companies in other sectors can track water conservation programs, recycling rate, and water reduction efforts. This example demonstrates that EMI is not just about a counting number. It is a strategic tool that helps companies improve environmental performance, reduce costs, and enhance their corporate image. EMI shows that environmental management can create both financial and ecological value. Next to challenge of EMI. Despite its benefit, EMI has several challenges. First, some environmental costs, like long-term damage to ecosystem, are difficult to measure. Second, not all countries have clear accounting standards for EMI, so companies must develop their own methods. Third, some managers may see environmental programs as extra expense rather than investment, making implementation difficult. Fourth, collecting accurate financial and physical data about energy, water, and emission can be time-consuming and complex. To overcome this challenge, companies need strong support from top management, proper employee training, and good information system that can track environmental data efficiently. Addressing this challenge ensures that EMI is effective, reliable, and sustainable. Next to conclusion. Environmental management accounting is a powerful tool that helps companies combine financial performance with environmental responsibility. By recording, analyzing, and reporting both environmental costs and benefits, EMI allows managers to plan, control, and improve sustainability programs effectively. EMI also increases transparency, efficiency, and corporate reputation, making business more responsible and competitive. For students and future accountant, understanding EMI is essential because modern accounting requires management both financial and environmental reports. When applied correctly, EMI allows companies to grow profitability while protecting the environment, creating a balanced, sustainable approach that benefits the company, the community, and the planet in the long term. It's all the material for me. I hope it's useful. Thank you. Wabillahi taufiq wal hidayah. Wassalamualaikum warahmatullahi wabarakatuh.